Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets today are poised for a positive opening coming in on the F&O expiry session ahead of the holiday. SGX Nifty indicates a positive start. Well, also if you talk about Asian stocks, they've climbed after the rally that we've seen on Wall Street and in bunch of stocks that we'd be talking about. But before that, the Wall Street cues out there. Well, we are looking at Nasdaq. Wall Street had a good close previous night with major indices gaining over 1%. So major rebound coming in even from IT stocks. Talk about the IPO with SEBI not Tata Tech gears up to float first public issue from the group in 20 years. Also, the board of SEBI is expected to meet today. Fire was expected, some amount of changes that are expected to come through. And if you talk about FIIs and DIIs data, well, foreign institutional, they've bought in shares. The investors have bought in shares to an extent of around 2,224 odd crore, and DIIs, they've sold shares around 1,991 crore. Well, a bit of F&O update there before we get on to Qs. NSE has scrapped plan to shift Bank Nifty F&O expiry to Friday. Now, BSE felt that NSE move could potentially impact the growth of Sensex or BankX derivative. Initially, NSE had made this decision in response to the BSE move to shift the expiry of Sensex and BankX derivative contracts to Friday from Thursday. However, NSE has now withdrawn its plan to align with BSE's schedule, and this has come after BSE has requested NSE to consider shifting the Bank Nifty expiry to any other day other than Friday. Well, that's the word coming in terms of the expiry and the whole confusion that played out in the markets yesterday. But let's talk about F&O Qs to see where the traction is. 47 stocks have seen long build-up, and these include the names something like L&T Finance Holding, Canfin Homes, HDFC Insurance Company, Max Financial Services, and LTI Mindtree. This is an important one. Talk about 47 stocks which have actually seen long unwinding. Well, Rain Industries, Bosch, Dr. Reddy, Aurobindo Pharma, and Indraprastha Gas. These are the ones which have seen long unwinding. Let's talk about 23 stocks that have actually seen short build-up, and this includes the like of Atul, Ashok Leyland, Deepak Nitrit, Escorts, and Hero MotoCorp. Almost 72 of them have seen short covering activities, and this includes the like of JK Cement, Mahanagar Gas, HDFC AMC, RBL Bank, and M&M Financial Services. Let's also talk about F&O ban on NSE, the stocks that come under the ambit. L&T Finance has been added, and Manapura Finance too has been added to F&O ban list for June. But let us get going and discuss some stocks and strategies with Rajesh Palviya from Axis Direct. Good morning there.
Good morning, Nickey.
All right, I'm going to start off by first asking you about the confusion that has been playing out with the entire F&O expiry dates. If you can provide more light. And also, since today is an expiry session out there, what's your strategy for Nifty and the levels that you will indicate for the trade setup right now?
So it was a day of confusion yesterday. First preponed of expiry, then in the post market we have seen that again announcement from NSE to scrapping this Friday expiry of Bank Nifty. So options of Bank Nifty. So this all created a lot of discussion throughout the days. What is going to happen? So first, if we discuss about this Friday scrapping of this Bank Nifty options, that is a welcome move by the market participant, because again we are seeing a lot of volatilities there, especially in expiry days, weekly expiry days. So by again, rolling back this decision, again, the major focus will shift on the Thursday only. Because, if we have a Friday expiry for Bank Nifty, so again, it's going to give double impact to the market, because most of the banking stocks on the monthly expiry is going to, all the banking stocks are going to expire on the Thursday, but only this Bank Nifty contract is going to expire on Friday. So again, monthly expiry again is going to have a challenge how the market is going to react on the Friday for Bank Nifty contract expiry. But on the request of market participant as well as on the from the BSE, that time NSE has taken that request, and they have rolled back this decision. So I think it's a good for the market again, because the three expiry in a week, like Tuesday we have financial Nifty expiry, then Thursday Nifty, and then Friday. So market remains in a volatile mood throughout the week. So that's very difficult to play for retail investor. So this is welcome move, and we expect that market to remain as we are seeing the behavior is since last couple of years. The same kind of behavior is going to continue for the market. Now moving to the market data setup. In the previous session, we have seen strong short covering action for all the calls, right, from the call writers for the strike of 18,600, 700, 18,800. All call writers have covered their position, because we have seen, especially in the last second half of the market, the Bank Nifty has taken the lead, and most of the stocks have shown good short covering action. So we believe that this momentum is likely to continue, as most of the call writers have covered their positions. So call writing activity is very low at this moment. Put base has shifted higher, and as we are entering to the expiry day, and the short covering was clearly there in the data setup, we expect that all-time high level can be there for the Nifty in today's session, and possibly once we crosses those level, then this rally can extend to 19,000, 19,200 also. So buy on dip should be your strategy. For Nifty, we are initiating here to buy 18,800 call option for 6 July next weekly expiry contract at 127 rupees. Keep your stop loss at 95, and we are projecting target for this call option of 18,800 is around 170 to 180.
Sure. So buy on dip strategy, 19,200 is what the levels can be scaled at, and Nifty hopefully doesn't, probably goes and touches that 18,888 mark. It has shied away just a little from that record high level, but 18,800 is the call option strategy coming in from Rajesh this morning. Because let's talk about Bank Nifty, because that's been the star performer. You spoke briefly about it. It's getting strongly back above that 44,000 mark, next resistance level for the index, and also the strategy for the investors for HDFC and HDFC Bank, because there's a lot of interest which has been generated within the counters, given the merger plans, given the delisting plans. How do you think market participants can now look at these two stocks also on an individual level?
So Bank Nifty is clearly taking the charge now, and we believe that this Bank Nifty can continue further more upside from the current level, and possibly with the help of Bank Nifty, Nifty will try to achieve its all-time high trajectory also in today's session. We expect that another round of short covering we can see in the today's session for Bank Nifty, as a very strong bounce back in the last half an hour of trade from the Bank Nifty in the previous session. So we are projecting target for Bank Nifty towards 44,400 to 44,500 in today's session. Your stop losses should be around 43,850. So strong short covering action, and most of the large cap bank have done well in the previous session. So we expect the Bank Nifty can continue further higher. As we discuss about this HDFC Bank and HDFC Limited, both stocks have done well in the previous session, and HDFC Bank have contributed in the previous session also for Bank Nifty. We expect this HDFC Bank can continue further higher, as stock is now breaking out its weekly resistance zone of almost 4-week consolidation range. So looking at the data setup for HDFC Bank, long build-up was there for HDFC Bank both, and we expect both stock can continue further higher. We are projecting target for HDFC Bank towards 1700 to 1740 in the continuation of this uptrend. Keep your stop losses at around 1610. For HDFC Limited, we are projecting target of 2850. Keep your stop loss now at around 2700. So both stocks are looking attractive, and the kind of buying interest was there in the previous session. It clearly indicates that now after this merger announcement, that these both stock will continue the rally.
All right. I'm going to address stocks and news, but one quick query that I'll probably take up with you, HDFC Life, because a lot of market participants want to know around that. How can that be navigated and traded? And there is a lot of open interest in the 5,200 strike call options in LTI Mindtree for the July series. It has also rocketed. So I wanted to understand how can the participants or the traders can navigate around this.
So as we mentioned that, previous day was very interesting, and post this HDFC Bank merger date announcement and all. So there was a lot of speculation by the market participant who is going to be the next candidate for Nifty 50. So the LTI Mindtree is the stock where everybody was betting on that, this stock can be a part of Nifty. That is the assumption everybody was making. So we have seen, huge open interest addition in LTI Mindtree, especially for previous session. So looking at the data setup, yes, stock managed to give breakout, and the kind of addition we have seen in LTI Mindtree, it clearly indicates that, this stock can really further higher. 5,300 could be the possible target in the continuation of this trade. So one can hold their long position. HDFC Life is also breaking
Rajesh,
out.
We'll come back to you for HDFC Life. Let me just highlight HDFC Limited because that's the stocks and news which is paramount to be addressed ahead of the opening. HDFC, there's a bit of clarification which comes in, says that July 13 delisting date is tentative. It has issued in clarification with respect to effective merger date with HDFC Bank, merger date of July 1st and record date of July 13. Much which was doing the rounds in the previous session yesterday, and we saw the rally coming in. Those dates are tentative. That's the clarification coming in from HDFC. We saw that rally and the markets being fueled by that rally in the last leg of the trade today, but there is a bit of clarification coming in from the board of directors. These dates are subjected to the completion of certain formalities, and board members of HDFC and HDFC Bank are yet to decide on the effective dates. Now, do remember the fact that HDFC and HDFC Bank merger was expected to be effective on July 1st. LTI Mindtree probably could be the beneficiary and entering in on the index once HDFC has been delisted. That's the word around those speculative trades there. But let's address the market open right now. 0.3% gains coming in for Nifty 50, 18,700 and almost around that level, a little shy of that record high level. So needs to be seen if there is more momentum building in on the FNO expiry. Let's talk about Bank Nifty Index. That's the one that we are looking at. We're looking at a 44,200 level, much above that with gains of around 0.25% coming in. Let's also talk about the mid cap index and the small cap index out there for you. Mid cap index, we're seeing gains to an extent of around 0.5% out there. And if you talk about the small cap index too, we are looking at the outperformance coming in. But bullseye, we're looking at a record high level coming in for markets. It is a new high, 18,908 mark, well above that 18,888, the level that was widely eyed and probably hoped that it will be navigated around. 19,200 is what Rajesh has suggested to us, probably the new resistance level or the highest level that we can look at. But voila, today we finally have that market high level coming in today. And we are looking at a record high open for Nifty 50 finally after days of wait out there. Let's talk about the sectoral indices that we have overall in the list just to see how the momentum has been faring. At this point of time, IT, we're seeing gains to an extent of 0.2% out there. And in terms of other sectoral indices that we have, in the charts right now, FMCG2 has been gaining some amount of traction out there. And if you talk about something like a real estate index in the pharma basket, well, not really surprised. The momentum has been positive optimism across the board, and we are seeing that broad-based rally perhaps coming in for the markets. FII trend has been showing up, and that probably is percolating down well for the markets. HDFC and HDFC Limited, these are the twins that probably led to the surge coming in for the previous session. And in today's session, markets have scaled that all-time high level. 18, a little bit of retractment, has come in from that, a pullback which has come in on that 18,900 mark. Nevertheless, on the opening level, we have seen those highs coming in and the markets briefly touching those levels. Let's address some top gainers and the top losers before we navigate our discussion to Rajesh and ask him his view now to navigate markets like this. Adani Enterprises, Divi's Lab and Tata Motors. These are some of the top gainers that we have on the list. Eicher Motors, SBI and Titan. These are the other gainers that you can look at on your screen right now. Talk about the top losers overall on the list. Well, HDFC too. HDFC and HDFC Bank Limited. I saw a flash coming in on the round of the top gaining list. Power Grid, Ultratech Cement and, these are some of the top losers that we have overall on the list. Let's actually bring in HDFC and HDFC Limited chart, Bank and HDFC Limited, because a lot of rally which actually came in from the HDFC twins, which are also your heavyweights, which have pulled up the index where it's supposed to see, and effectively a participation coming in from the financials has led to a sharp opening coming in for the markets. But Rajesh, come in on this one. Finally near that record high level for the markets, a sense of excitement there for you. Were you anticipating this move just in the opening deals? Or, 19,200 mark is what you suggested to the viewers out there, if I'm not wrong, right?
Yeah, so it was clearly indication that, yes, we are going to have this all-time high into this session. And looking at the short covering in the previous session was clearly negating it. And most of the large cap stocks have done well in the previous session. So, and today we have expiry day also. So a lot of rollover activity is also, giving impact to the market, because this time for June series, we have seen good traction on the buying side. So most of the rollovers on the long side, long built up was clearly there in most of the stocks. So we believe that, the rollover activity is also indicating till now is on the long side. And we expect for July series also, this rally is going to continue, and we can see Nifty to scale up to the 19,200 level in the continuation of this uptrend. So that's the view on the market at this moment.
All right, so that's the word coming in. HDFC Limited and HDFC Bank. Let's revisit that. Also, you were talking about HDFC Life before we kind of wanted to put out the clarification which is coming from HDFC Limited. How do you look at it right now?
So from insurance space, HDFC Life have done well, and almost stock has outperformed and given a breakout of its multiple resistance zone area. Yes, today is expiry date, of some adjustment on the position is going to take place. But looking at the overall setup for HDFC Life, we expect stocks continues to hold above 640, 635 level. Then this stock can inch up further higher towards the 700 to 720 level. In the continuation of this uptrend. So most of the insurance stocks are doing good, and the kind of traction we have seen in HDFC Life, we are projecting 720 target from the current level. HDFC Limited is also getting some bit of supply pressure on the high side after this opening. But looking at the data setup on the near term, short term setup, we expect that if the stocks continues to hold about 2700, 2710 level. Then possibly long trades are going to remain in the system, and possibly this stock can move further higher on a positional basis towards 2800 to 2850.
All right, Rajesh, that's the word coming in. Pretty much optimistic start coming in for the markets, and of course the expiry playing out, a bit of updates out there. Confusion has been taken care of, I hope, with the whole BankX and the Sensex alignment and the Bank Nifty alignment. Rajesh, thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure having a conversation with you. All right, let's actually address now about the fundamentals about the market. A lot has been spoken about of where the alpha is, whether it's in the IT stocks which have taken a drubbing, or the financials which are going with full bullseye, probably strong. With the way, day after day, we're seeing new highs coming in for the financial names. But Ajay Bagga is here to take us through, the market moves. Of course, it's going to be a positive start, a record high level, finally scaling up for the markets. FII activity has been pretty buoyant. What are you making out of it, sense of direction, and the pockets that you think investors now should be looking at?
Yeah, hoping that we have a closing all-time high today. Intraday we have made earlier as well, but the markets 3 times have tried to close at the lifetime highs of December and have not been able to. So pretty confident that today we should be able to see this marker coming in on the Nifty. Overall, where are the markets positioned? It's towards the end of the central bank rate hike cycles globally. Inflation stays persistent, so we have seen some about turns in policy, especially in Australia, Canada, and some other central banks. Trouble in countries like UK, where inflation stays very high, and we saw strong rate hikes in UK and Norway last week, which rattled the markets. Markets are coming off that. Last evening, US data was very strong across consumer confidence, across manufacturing, and housing sales. Housing makes up a large portion of the economy, and it's a good leading indicator overall. So global economy not tilting towards recession. Recession pronouncements have been postponed to next year sometime. Rate cuts not looking very much possible within the second half of this year, probably in the second quarter of next calendar year when global rate cuts will come in. But we are expecting in RBI to be able to give some kind of a rate cut booster to the economy going into the year end in India. Sector-wise, I would say that the year before the elections, normally the industrials and infrastructure tends to outperform given the kind of money that goes into the economy. FMCG has already run up in anticipation of the boosters coming into the economy. They are quite expensive, but that's been a historical fact in India. I would still, play the consumption theme through more the auto segment. I think that will show a multi-year recovery coming in. Real estate looking very strong in the listed space. So real estate should do well. Industrials, infrastructure will do well. IT, we are expecting some more downturns, some disappointments over the next 2 quarters will come in. In fact, a very, very senior doyen of the industry wrote a very nice blog over the weekend where he said that if you see most of the BFSI earnings calls of the US over the last 2 quarters, they were allocating more money on their digital space, on their use of cloud AI in their day-to-day operations. But the Indian companies are not showing that order inflow. So there seems to be some dislocation between the two. But for now, given the AI boost in the US markets, given how Nasdaq has been performing, we are getting some reflected glory in our tech companies also. There, I would be cautious. So banks, NBFCs remain top picks. They will do well as the economy continues to do well. Industrials, infra, and real estate, auto on the consumption side. And on the export side, I think textiles are well positioned for a good festival season in the US as inventories come off. And markets are buying into textiles in anticipation of a good next 1 year on the textile side.
All right. Mr. Bagga, we've spoken about rate sensitives and your preference towards that overall in the story. You've spoken about auto, you spoke about real estate, you spoke about financials have been the theme which has been ongoing anyway. But let's talk about the mid cap and the small cap index, because that's where the party lies, or the party was. Mid cap was up by 9.8% overall since the time we've seen since December 1. Small cap too has rallied significantly. Let's be stock specific and pick up counters that you think can still be potential pockets of investment coming in for the viewers and the market participants right now.
Yeah, stock specifics I can't give because I'm not SEBI registered. So I don't talk about stocks. I would, limit myself to caps and to sectors. You're right on mid cap, small cap. The indices have outperformed the large cap. But the caution here is that everything has moved. So even players with very high valuations have done well, which might not be justified. So you have to be cautious on the small cap, and you're right, it has to be very stock specific. So there I'm constrained. But how I am looking at it is that if there is a slowdown globally over the next 12 months, you will see some kind of slowdown in India as well, and then the quality reasserts itself. So for the long-term investor, it's better to stick to the higher quality name or the highest quality names, both in large cap, mid cap, small cap. Small cap, you must remember that the exit doors shut very strongly when you try to get out of them in a downturn. So don't go all in on the small cap side. And there is very interesting movement, interested movement in the stocks by interested parties, and which you can't really decipher as a retail investor. So one clear way, a proxy for choosing small cap, mid caps is look at the institutional portion. If domestic mutual funds, FIs are buying in, somebody has done their due diligence for you. So for the retail investor, that's a good proxy to look at small caps and mid caps, which have good institutional partnership. That gives you a base, and then analyze the cash flow, analyze how much is the addressable market of the company and where you see the growth coming. All these stories that we see of 1,000 baggers and all, a few of them are really operator driven. A few of them are genuine cases which have done very well, and they will do very well. But picking them out, no fund manager is able to give you today that these are the top 5 small cap or mid caps. But look at the themes. I think right now what's working for India is anybody that has cash flow visibility and is low on debt, which is a lot of companies. You have 200 odd names at least with very high return on equity, very high return on invested capital, low leverage. I think those are the kind of companies you can look at in mid cap, small cap, but diversify, hold a number of companies. The best way to play it, I say, especially for the small caps, is to go with the mutual fund route. Buy the top 3 mid cap or small cap mutual funds. There you get exposure to the top 40, 50 companies that a professional manager is looking at and a team is looking at. That's easier for a retail investor than trying to pick your 1,000 baggers yourself, which mostly leads to loss of capital.
Sure. I'd also want to chat about the entire merger which is taking place for HDFC Bank, where HDFC shares are apparently tentatively going to be delisted on July 13th. The board of both the companies apparently would be meeting on end of this month, June 30, to kind of take it forward with terms of the merger deal and the delisting. And speculations are rife that LTI Mindtree would be the one which probably will make it on the index level once HDFC has been delisted. That's of course the reports which are suggesting right now. We're not sure as to how effective these dates are. There is just a sense of tentativeness to this. How are you viewing this entire deal between the two biggies and how it's going to be scaling up for the entire financial space? CLSA came in with an upgrade a few days before the merger actually took place. Do you see more upgrades coming in for HDFC and HDFC Bank and the two heavyweights going forward too?
Yeah, again, I won't be able to comment on the specific stocks, but you look at the trend. Indian companies are getting global heft. They are getting global size. That's the big story that we have to focus on. So there are a number of Indian companies which would make it to the Fortune 500 kind of listing on market cap or turnover now. So that's a good thing. Mergers, you have to be careful of the pricing. Here it's within the family. Within the same promoter family, and it's more a very professional kind of promoters. So there has been a lot of transparency. There has been a lot of institutional interest. And guess what? More institutional space gets created for especially foreign investors to come in and buy more of the merged entity. So that's a positive. But on the quality of the companies or the perspective of whether it's a buy or sell, I would not be able to comment. Overall, again, if you look at quality, if you look at the top three in each of the favored sectors, that's the best place to be. Mid cap, small cap can be 10%, 20% allocation of the portfolio. But most of the portfolio should benefit from the broader India story. And there, the banks are very well positioned. They are a big chunk of our markets, banks and financials. And that is a multi-decade story, along with consumption and along with infrastructure for India. So a lot of winners are available. And I think markets have really shrugged off a very difficult period of FIs selling over the last 12 months. Last 3 months, we have seen FIs roaring back. And now it might become a case of much more money coming out of China and coming into India. That could help the markets as well. So optimistic on the Indian market, sideways on the global markets, expecting one downturn in the next 12 to 18 months. Hopefully the central banks stop well short of the cliff and don't do what the New Zealand central bank did of running their economy into a recession already. Hopefully the others will be able to calibrate it, but that's the toughest job in the world, to stop in time, because rate hikes take lags to filter into the economy, and then there is a sudden fall of a cliff. That's how recessions come in. So very tough job ahead for central banks. Bank of International Settlements also, in its annual economic report on Sunday, they highlighted that this portion where inflation is still persistent, rate hikes are largely done with, lags are going to come into the economy, and we don't know how those impact the economy all of a sudden. For a year, the economy has continued to hold up, and then all of a sudden that 5% interest rate differential starts showing up in different sectors. So tough times for central banks, and it could translate into the economies. Good thing is they've got the rates high enough to be able to cut. So the Fed put is working for the markets. That will help the markets. And one final thing, the data that's coming out, that 22 times that the S&P 500 has gone up more than 10%, 22 previous instances. The next 6 months median return has been 8%. So hopefully we see good returns over the next 6 months. I'm being conservative and calling it sideways. You'll probably see returns and then clawbacks happening in the global markets. Indian market should continue to do well on fund flows, good economy, and strong domestic flows as well.
All right, Mr. Bagga, thank you so much for taking out the time. We're just going to leave it at that, completely running out of time. We have the senior editor, Mr. Santosh Nair, with us right now, joining us in the studio to talk about the record open level that we've seen on the market, something that market was probably awaiting. On closing basis, we aren't really there, but how structural is the bull run, and how are you viewing the markets right now?
Well, I think what sets this bull market apart from some of the earlier ones that we have seen, Nickey, is that I would say that there's no sense of euphoria that you normally see when the market is at all-time highs. And even speaking to brokers, fund managers, we get the sense that at this point in time, the mood is still cautious. Stocks are going up, no doubt, but at the same time, people seem to be a little wary. In fact, there seems to be more disbelief than a belief, and we've seen that usually when that happens, prices tend to rise for longer. So at this point, I would say there is a healthy dose of skepticism in the market. Investors are still careful about what they are buying, and that I think probably could result in this market rally continuing for some more time.
I see two red flags within all of this. A is a lot of promoters have been selling off, and the IPOs that have come in are also OFS. where most of the investors and the promoter category are probably looking at using this market as an opportunity to exit. That's point number one. And also trading volumes, they've been thin, right?
Right. So the thin trading volumes partly could be explained by the fact that there is a bit of caution among investors at this point. As for the first point that you have raised, Nickey, that there are a lot of block deals happening and it's largely promoters and investors, private equity investors, which is so-called the smart money, which are exiting this market. Now, that's a fair argument, but at the same time, if you were to turn this argument around, even the buyers for those blocks, they are also the supposed smart money. If you see, they're being picked up by institutional investors, both foreign as well as domestic. So there's a counter argument to be made here as well. If you were to look at the macro picture at this point in time, again, that doesn't really give any cause for concern. Definitely, you might argue a little about valuations, but again, let's not forget that the market has been in a time correction for almost 2 years now. During this period, you've seen a significant improvement in earnings. So relative to the valuations that many of these stocks were quoting at when the market was at 18,200 at some time in October 2021, the market is not crazily overpriced. Yes, they're not cheap for sure, but they're not crazily overpriced, which is usually the trigger point then for the market.
Valued is the word probably. We are looking at the valuation, which is justified.
Right. So, but if the earnings deliver, right now we are still not talking about a recession in India, whereas we're talking about a recession in both the US and Eurozone. And if that happens, it's very unlikely that India will not feel the effect of that through trade channels. But at this point, nobody is talking about a recession. If you look at any of the sectors, it's hard to find a sector that's performing very poorly. Even some of the laggards like IT and pharma are now beginning to find takers, because valuations have come to a point where probably a section of the market thinks that the downside is limited.
Yeah. The risk reward seems to be well adjusted given the kind of valuation that probably the pharma counters are now sitting at. One last question before we wrap up this segment. I wanted your understanding. You've written enough and more about HDFC in your short call, which is also a story that we pull up every morning and give an expert comments out there, where Santosh gives in a piece of how the F&O trend has been moving and how otherwise you should be looking at. You've written about HDFC Ltd. There was a little bit of whole confusion which set in yesterday with regards to the delisting date and the potential beneficiary that will come into the index post HDFC Ltd is delisted. How are you looking at the merger, A, and B? Do you think LTI Mindtree, of course, is the beneficiary out there, because a lot of call options are also active around that space?
Well, if you look at purely by the activity in LTI Mindtree, there seems to be an indication that the market is almost convinced that this is the stock that is going to replace HDFC in the benchmark indices. So short term, there could be a bump up in LTI Mindtree, because whenever a stock becomes part of the index, a lot of passive funds are compelled to invest in that. So you could see a bump up. But I would say that at this point, overall, if you were to look at the IT sector as a whole, there is still the mood there is a little cautious at this point. So many of the stocks which are rallying, so for instance, like say HDFC Life, that's also seen a lot of action over the last few months. That's mainly because of parent HDFC hiking its stake in that. So there are a lot of technical factors in many stocks at this point in time, and that could take some time to play out. But we'll still have to see at some point. Again, the focus is going to shift back to the fundamental side of the story. So that is where I think investors should be a little wary about chasing prices.
All right, so that's the word coming in from the senior editor right now. Be a little cautious in terms of just chasing the prices. Look at the fundamentals as well when you lap up these equities in sheer sense of euphoria. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. From me, Santosh Nair, and the entire team which puts the piece together. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.